Hello and welcome to The Future of Business, the podcast where each week we discuss the issues that will have a significant impact on the future of business in Ireland and beyond, and explore their possible consequences for people in business and for society more generally. I'm Vincent and I'm joined by John Bowe, partner in Mazars Ireland, and Pete Smyth, founder and Chief Executive of Broadlake, to discuss the private equity market in Ireland. John, I'll come to you first. How do you define private equity and how does it differ, say, from venture capital investment?
So I define private equity as funders of businesses that are probably more established, already have a track record in generating EBITDA, versus venture capital who are probably coming in at an earlier stage. Private equity want to back owners that want to take their business to the next level. They probably do it through four ways, really. Growth capital, or organic growth capital, so funding to grow organically. They provide funding for acquisitions. They help businesses delever, and sometimes they help businesses do a shareholder reorg, where some shareholders want to come out of the share register and others want to drive on and take the business forward. Delever
meaning reduce debt that they may be in the business or whatever?
Correct.
And in most cases, is there a certain turnover threshold or amount of time that a business has been up and running for private equity investment to get involved?
Not necessarily time. I do think for private equity, they want you to be they want you to have got through the proof of concept stage. You are generating EBITDA. I think if I look at the market, there's a number of private equity players that sit in different sizes of businesses. So I would say generating over $1 million plus EBITDA. Generating strong margins. If you look at the Irish market currently, we have the Carlisle Cardinal Fund, we have MML Capital, we have BGF, we have Causeway, we have Renatus. So there's development capital also. There's a lot of equity out there, and we have Pete's Broadlake as well.
John has just mentioned how many players there are in the market now, Pete, including yourselves in Broadlake, but that's a big change on when you first got involved in this market back in the late 90s.
Yes, Vincent. When I started out life out of college, I went into private equity in Ireland working for an Irish company, but was focused mainly on deals in the UK and continental Europe. And the reason for that was not that there weren't small and medium-sized businesses in Ireland, but Irish businesses never really at that stage took to the concept of private equity. They were businesses that people were looking at multi-generational ownership. People treated them as the family silverware. So why would you actually have somebody else in that you might conceptually give away some of the equity to for a check? It just didn't make sense in those days. I guess when I set up Broadlake in 2009, the world had changed somewhat. So we were at the start of the deep recession. But businesses then had started to come around to realising that actually maybe the concept of private equity as a fuel to actually fuel the journey for your business might make good sense. And I think the great thing in an Irish Inc. context is that since 2009, we now have 8 funds operating in the Irish marketplace that have brought $1 billion of capital into the market, that has completed nearly 50 transactions in businesses that probably turn over between 5 and 100 million that are ambitious for growth.
But is it still not the case that most Irish SMEs, those that are growing well, that have good customer base, still see the business as their own property to hand on to their family or in a trade sale otherwise?
I think a couple of things have kind of changed. I think Irish businesses have become more international in their focus. Right. And I think if we go back to the family silverware or the old film The Field, where people want to keep the land and they don't want the land to be taken off them, I think now you're not concerned about the field next door. You're concerned about how do I do business in America? How do I do business in Europe? And I think what entrepreneurs are becoming more aware of is that you either bring your business forward or your business slips back. You cannot have an SME that stands still. That concept of a lifestyle business, I think, caught a lot of people going into the recession. So people who thought they could just generate profits from a business and just maybe pull back from their day-to-day involvement in that business and continue to generate those profits, I think were caught out a little bit going into the recession. So I think people now are saying the business has to keep going forward. I can't stop it going forward or it'll go backwards. And if I'm not at the helm, I need to look at how I do that. So that could be incentivizing the next layer of management. Historically, by the way, trade sales, you mentioned trade sales, people always thought that the only option was to sell their business to a trade sale. And that used to be foreign competitors who'd come in and look to buy Irish businesses. Now people are looking at them and saying, hey, private equity companies can actually take my business to the next level. So whether that's with me on board or whether it's with the next level of management on board, it gives more options for people than just the traditional trade sale.
What do you think, John? Do you think, despite the fact that Irish business is changing, becoming much more outward, exploring export markets, the private investment capital is out there increasingly, are there still not a lot of Irish owner-managers who are afraid of losing control, afraid of what these new investors might require them to do?
Yeah, culturally, we've always, as Pete said, the family silver. We've always kept equity to ourselves. And it takes time. But I believe the billion that Pete mentioned out there in the market, that's really the enabler. There's funds there, but really it's the value add, right? And I think as we've seen private equity funds exit investments and let people know those stories. So Pete will have examples of his own exits. Carolyn Carlisle would have exited Lily O'Brien's. And again, in that story, you would have seen that the private equity investor came in day one. They would have helped de-risk some of the shareholders and take some money off the table. That probably freed up their mind space to make better business decisions. They went on a journey then for over 3 years where they invested for growth and went into new markets, and then they exited again. And the benefits of that were threefold. It was the entrepreneur owner of the business benefit once on day one when they took some money off the table, but on day two again. But also the management team, and as Pete mentioned, putting equity in the hands of the management team, and also the private equity fund. They made a great return on their investment also. So I think that education piece and the more stories like that come out in the market, and we are seeing that as private equity funds exit their investments, will help educate more Irish business owners.
Because it's not always the case that a private equity investment will ultimately lead to the sale of the whole company to an unknown third party down the line. Now, the private equity firm will have to exit at some stage, but they may exit to another private equity firm, and the owner manager, the entrepreneur, the management team stay in place. But as you say, with some capital secured.
Correct. Secondary PE buyouts are very common. So there's different sizes of global private equity. So in the Irish context, we're a small market, so the pool is quite relatively small versus the global private equity market. But we have great entrepreneurs who are out there growing businesses internationally. So then the opportunity is you take it to a certain level. You might have broke into the US, and there's another private equity fund that might want to get you into China, and that's the market we play in. So there's loads of opportunity for growth. I mean, you could talk about good Irish examples in an Irish context. Fintrax is one that I'd mentioned because I was involved in it. Back in 2012, it's a West of Ireland business. It specialises in tax-free shopping. It's tech-enabled, technology business. It sold out. The original founder's business was owned by its founder, 70%, and by management team, 30%. Private equity fund from the UK came in and acquired that business for 170 million in 2012. 3 years later, it was acquired again by an additional private equity fund for in excess of 580 million. And I believe today that business is probably worth in excess of $1 billion because that private equity fund made a few additional acquisitions. And still, it's a great employer in Ireland. So that's the key message, I'd say. Jobs are still in Ireland, in the west of Ireland.
Pete, John mentioned not only entrepreneurs, many of whom are the founders of these businesses, but the management teams. And the management teams of Irish SMEs that are growing fast are changing. And they probably need to be incentivised to stay where they are, don't they?
I think so. Certainly the labour market is getting a whole lot tighter, as we're reading and we're seeing, in terms of attracting the right talent. And I think the whole world has changed in terms of now people are looking at success. If you want success on a global level, you got to get a team that is heavily incentivised for the medium to long-term success, as opposed to year, where you can pay people salaries and bonuses. You need to get people bought into the vision. And I think the best way to do that is either with equity or some share options or the likes. And we've seen the big companies in all sorts of sectors over the years do that very, very successfully. And then they get the loyalty and they get to build on what they're developing. And I think for me, if you look at private equity for the modern entrepreneur is something that he needs in his toolbox. Right? And he may not use it this year, he may not use it next year, he may use it the year after, right? But he needs to be aware that it exists out there. So if you look back to entrepreneurs 20 or 30 years ago, they may not have been as focused at going international. They may be focused on domestic. They may not have been as focused on using acquisitions as a route to growth. They may have thought they have to generate the cash, invest it in sales teams and grow organically, right? Now in terms of what private equity can do is bring a level of fuel to these businesses that enable them to go international quicker, to actually make acquisitions, to achieve the potential of their businesses and in turn the potential of their management teams. Because a lot of the management teams in these SME businesses now are very, very ambitious, right? And if you don't provide them with the opportunities, they will be gone to somebody who will provide them with the opportunities. And if we look back, private equity in today's world probably replaces the fuel that the public markets provided to some of our best international companies in the last 20, 30 years. Like you look at the likes of CRH. Like when CRH came together in 1970, it was turning over Irish Cement and Roadstone. When they came together in 1970, it was turning over 30 million, with 95% of that business in Ireland. Today they turn over 30 billion.
Yeah, but to take CRH, to take Kerry, to take Kingspan, to take all those companies that over 2 generations have gone from being SMEs to global companies, they all went out on public markets, took stock market listings. Why shouldn't an ambitious, fast-growing Irish SME go public rather than seek private investment equity?
Because, Vincent, the public markets have changed a lot in that period, and the public markets are now less interested in what we would call small cap companies. So if you're a large institutional investor sitting in London or New York, you want to be looking at big companies to invest your pension fund money or your insurance fund money. You don't want to be looking at companies that turn over 30 or 40 million because they tend to be a little higher risk for institutional investors. So what's happened is the public markets now are mainly interested on businesses that are market caps of $1 billion plus. Right, you might get them interested.
So maybe sometime down the line, it might be the route to go.
Absolutely, and I think we're seeing that in terms of private equity. Private equity has kind of filled that void, and it's by its very nature private. Private equity means that you can do your growth in private, so you can actually make investments. You're not restricted by having to report your results to the public markets every 6 months. So you can actually make long-term investments for these businesses, which are right for the businesses. And then when they're right to access public markets, they're there at the right time.
John, for an owner or a management team that knows they need capital to grow, knows broadly speaking where they want to go with that capital, what would you say to them, though, that the likes of a Pete or somebody else coming in from a private equity fund, they're going to sit on their board, they're going to be more hands-on, they're going to stretch them. Are they right to be perhaps a bit concerned about the downside of external equity coming in?
Yeah, I mean, and that's why it's very important to go out there and talk to numerous parties. Okay, so I believe that private equity...
Not just Pete.
Well, not just Pete. Back to the point that I think there's loads of money out there at the moment. You want to get the right fit for your business. So it's very important you do your due diligence in that process. It can't be just a one-way conversation. I think if a private equity party is meeting you, you need to be asking as many questions of them. What can you do for my business? Where's the value add? Can you open up doors? Can you get me into new markets? As they're asking of you, okay, and that's the real important point. So you're dead right in a way. It's not, you have to go in with your eyes wide open. You have to understand that they're putting a significant amount of money into your business.
They're not a charity.
They're not a charity, and and in most cases they're letting you take a little bit of money off the table as well. So come with that. There's going to be some rights that they'd like to have. They'll want a seat on the boards. They'll probably want downside protection in an underperformance scenario. So, you have to go in with your eyes wide open. Hence, you need to be having as many conversations in that process as possible.
I think when you got into this game first, 20, 25 years ago, Pete, it was all about the bottom line. It was all about financial engineering, the private equity game. Do you think now it's more about personal chemistry, how the external private equity funds actually view that management team, view that owner, believe what they can do together?
Yeah, I think so. When I started out, it was about looking at efficiencies in business and looking at leverage levels. So there was an element of financial engineering, right? I think the world now, the private equity spectrum, it's not a one size fits all. So if I talk about the 8 funds that are currently operating in Ireland, each of them have different sectors they're interested in. Each of them have different sizes and stages of development that they're interested. But most importantly, stylistically and culturally, they're all different, right? So what it is important is you get the right person for you, right? Because it is a partnership, there is an alignment of interest, it is a long-term journey. There's only one certainty: there'll be ups in that journey and there'll be downs in that journey, and it's the downs that really test the relationship.
And how would you describe Broadlake's style? And how long are you prepared to partner with an investee company?
So I guess we're lucky because our capital base is our own capital, it's family capital, so we're what you would call evergreen. We don't have a restriction where we have to sell a business after a period of time. A lot of funds are what you'd call 10-year funds. So that means that investors give the fund the money to invest, they spend it in the first 5 years, and they have to give it back in the next 5 years, which means their average investments tend to be plus or minus around 5 years. Sometimes that works perfectly for companies, but other times a company is looking further down the track. They're looking to 5, 10, 15 years, and sometimes a different source of capital can be more suited. In terms of the relationship for me, I'm a little bit cynical about private equity despite playing in the space. And what interests me most is whilst I started out in private equity 20 years ago, I got about a decade of experience in terms of running a business, right? Hands-on in terms of developing a team, developing a brand, making acquisitions, making mistakes, learning from those mistakes. And now, in terms of coming full circle back into private equity, the reason I'm interested in it is actually that I believe that combination of being able to provide capital to entrepreneurs, but also be able to help them with support. If you look at their scarcest resource is people. At a senior level in SME businesses, they maybe have 3, 4, 5 people, but they don't have a team of 10 people with the expertise in brand and marketing and acquisitions and technology and culture that maybe they would like for their journey. So for us to be able to help them on different aspects where they don't have the resources internally, that's the bit that makes it interesting for us, and that adds real value. I always say the cash is the commodity. Right, we live in a global world now. Cash is very mobile, so small companies now can access cash from all over the world. Right, the key thing for me is what comes with the cash. Cash is the commodity.
I'm going to ask you both now. We've heard of the advantages of a growing market for private equity in Ireland. What are the downsides? Is it that the business doesn't turn out to be as fast growing as the investors and the business itself thought? Is it that the market changes suddenly and the whole world changes for that business? Is it that the chemistry between investor and investee doesn't work? I mean, there are downsides, surely.
Yeah. What I would say on that is go in with your eyes wide open. So yes, every journey is going to be bumpy, ups and downs. And in a scenario where private equity have been in a competitive process, valuations might have been high at the time, they'll look for some protections on the downside.
What does that mean now? So
for me, it means you as an example, the business they invest in is making 3 EBITDA when they invest. They pay a certain multiple of that for their equity, and they put money into the business and they allow an owner to take some money out. If the business underperforms, and let's say for whatever reason it becomes 1.5 EBITDA business down the road, well, there's probably some protections in the small print that owners need to be aware of that may allow them to change the CEO or may allow them to step in there. And there are some of the things you need to go in with your eyes wide open.
Look at the small print.
Look at the small print. So that for me is probably a big thing. You're also you are giving up equity, so it is dilution effect on you. So you have to be aware of that going in day one as well. I mean, you weigh up the benefits and the value add, and when you've had a number of conversations with a number of parties, you try to get the right fit. But it's about being able to work in the bad times as well, and understand that they are putting a significant investment into your business, and hence, if you don't perform, well, how do we work together to make sure that we can fix that?
Pete, I presume not all of Broadlake's investments have turned out exactly as you thought they would.
Yeah, I think things are going quite well. So we invested in 7 businesses over the last kind of 10 years. 2 of them we exited with the entrepreneurs last year because it was the right time for those entrepreneurs to exit and the right time for those businesses to exit. And one of the businesses was sold to a UK PLC, which really strengthened their offering. And another business was sold to a New York private equity firm who was looking for a European business with some US presence. In terms of so touch wood, things are going pretty well. In terms of the downsides, back to your question, for me, if it's a cycle, the cycle happens whether you're in a relationship with private equity or whether you're there on your own. And potentially going into recession, maybe having somebody with greater resources behind you or beside you might be a good thing for you as a company. For me, it usually comes down to the relationships and the alignment of interest. right? So what we're focused on is we tend to be focused on backing entrepreneurs. So Vincent, if you had a company, we might reach an agreement to maybe acquire 30% of that company, right? Some of the money that we would give might go into the business, and some might go to you
into your bank account.
into your bank account to actually get some financial security. Because one of the things for entrepreneurs that are running these businesses, they often don't take a whole lot of money out of businesses because they want to invest that fuel in the future growth. But it's nice for them actually to get a level of financial security on that journey, because it means that they can look forward without the fear of, will I have financial difficulties? So I think for us, we're not looking to buy companies from entrepreneurs that have necessarily ended their journey and buy the company outright. We're looking to take a stake and partner with that company. And therefore, our interests are very aligned. People sometimes think that private equity want to control your business. And as I always say to people, if you think in an SME world that a 100-page document sitting on the table that's called a shareholders agreement gives an outside investor somehow control over your business, that's disillusioned unless you want to use that document aggressively in terms of making serious changes. But with the people that we partner with, we're in it for the long haul. We're usually not majority shareholders, right? So there is an alignment of interest. So we got to make sure we find the right people that are going to be there in the good days and the bad days, and that we actually respect, and likewise they respect us.
Do you both feel that this is an important fuel, as Pete calls it, to actually develop a much sturdier, greater scale of fast-growing Irish businesses that are expanding overseas but based here?
For me, it really is. And I'll just pick up on a point that Pete made first about de-risking your own personal balance sheet. So I fully believe business owners make better business decisions when they're actually not worried about making the mistake, or do I make that acquisition? What happens if it goes wrong and the value I've built up over 10 years of really hard work maybe goes away? And I think for me, that's where the private equity party coming in can actually take that mind share away from them, because they've put a few quid in their own personal balance sheet. I believe private equity has a real value add in the Irish economy. We've seen great examples over the years. I think we're going to see a lot more over the next 10 years. So it does provide that fuel. It allows people to make better business decisions and maybe make quicker, speedier, faster growth, which can only be good.
8 firms in the market now or so. Pete, do you think that's going to grow?
I think probably what we have with the 8, I think, is probably well suited to the supply in the market currently, right? Because all of these funds need infrastructure in terms of people and the like. So I think that's probably the right number. When you go to, they're complemented by UK firms, European or US firms, who tend to focus on larger transactions or transactions with a specific sector orientation. Right. And so I think they will come in and fill that void for those types of transactions. I think 8 is a good number. When you look at $1 billion of capital and only 50 companies have been invested in to date. Right. So there's still a lot of that billion that still has to find the right home. And I think, is it here for the long haul? Is it a good thing for Irish business? Like if we look at our businesses turn over on average 25 million. They employ 150 to 200 people. All of them are looking to grow in scale by at least 3 or 4 times, right? And some of them are not necessarily in high-tech, fancy kind of sectors. Some of them can be more traditional type sectors. But what they're looking at is opportunity outside of Ireland. And I think to seize the opportunity, whether it
is that essential in your view, in terms of companies you're interested in investing in, that the Irish market is just too small?
I think so. We joke and say Ireland is like Birmingham or like Manchester. And if you went to Birmingham and Manchester and took an entrepreneur and said you couldn't go outside the ring road, how would they kind of feel? So certainly Irish entrepreneurs, and it's not something that we have to look hard to find. All, or certainly the vast majority of mid-size ambitious entrepreneurs now are looking outside of Ireland. And I think for the fuel to fund that growth, because it can be risky and you got to make investments overseas or acquisitions, I think private equity is here to stay, because I think it's a good way of supporting that growth.
Finally, maybe, John, a lot of this is about timing. It may not be the absolute right time for a fast-growing company that wants to grow to look for a private equity partner at this stage. But how should they prepare for that if it's right for them maybe 2 or 3 years down the line?
So on timing, I suppose I'd say, when is the right time? No one really knows. Okay, so there's money out there. There's the commodities on the table at the moment. If you have a strong, ambitious growth plan, there's options open for you today. Is how I'd put it. How should they prepare? I think people back people. Private equity firms will, first and foremost, will back people. The biggest reason when I ask private equity firms why they didn't go with that company, they will say to people, we just didn't feel the fit was there. So the business could be a cracking business making good EBITDA, but the fit wasn't right on both sides of the table. Okay, so people, look after your people. Have you got the strength and depth in your management team today? Have you got the finance function, good CFO in place? Have you got so look at your people as a first protocol in terms of preparation. And that could be today for 24 months down the road. So plan today. Have a business plan, have 3-year forecasts, know exactly where you want to go. You don't have to have all the answers. I think the value add will be brought to the table as well. So but you have to have an ambition to see a bigger growing business in the future. And then you'll attract interest in today's market.
Okay, we'll leave it there, gentlemen. John Bowe, partner Mazars Ireland, and Pete Smyth, founder and Chief Executive of Broadlake. Thanks indeed. The main points I took from the conversation is that this is a very significant new source of fuel, as is put, to spur on the growth of solid Irish businesses that are growing, that have a track record, that know where they want to go, particularly in terms of export markets, that owners and management teams in particular now are looking for new ways to incentivize themselves financially, but also be able perhaps to take some money off the table and get a little bit of security in their lives and bring in new partners, that you do need to prepare for it. Try to make sure the timing is right, make sure your own business is set up properly for that outward injection, not just of capital, but of expertise and perhaps of doing things in a different way. Look at the small print, prepare, look around the market, see what type of private equity players are out there. They may have different objectives, they may have different categories that they want to get involved in, they may have different personalities and types of mind, and chemistry is an important thing. But it's here. It's a big and growing market, $1 billion in capital out there, and the impression I get from you guys is that this is going to be a very important source of growth for Irish business generally, for Irish entrepreneurs, for Irish management teams. Thanks indeed. Thank you for listening to The Future of Business with Vincent Wall and Mazars. We welcome any feedback to our podcasts, and particularly your suggestions as to topics we should cover. You can comment and rate us wherever you find this podcast or on mazars.ie. Bye for now.